Okay, recording this video Wednesday, 27th of November 2013. It is 5:47 a.m. Chicago time. It's just gone midday here in Europe, and it's the day before Thanksgiving. And what an appropriate day to launch an attack by the Brits on the US dollar. I've been talking about this trade setting up for several weeks now, and today we are getting the break to new highs. And the reason they're doing this is because everybody's mind is elsewhere. All the major traders in the US are thinking about Thanksgiving. They're thinking about a storm hitting New York, how to get out of town, how to go visit their folks, all that stuff, their long weekend. Trading is going to be thin, and we're sitting at a critical resistance level. So this is the chart I've been talking about for a while now. This is the weekly chart. This 162, 163 level is absolutely key. It has been overhead resistance for a couple of years now. 65 kind of on the upside, but laterally 62, 63 kind of here lately. So what they want to do, because this is such an important high, getting through there is going to be really tough. So what they're doing is they're launching attack when there is not everybody at their desk. There's not the full liquidity to fight this. There's not all the sellers there to kind of bring it back down into the channel. There's going to be light trading, and so it's going to be easier to gap it through this important resistance level. And once they've done that, then everybody has to switch around and figure out, what the hell am I going to do with my positions? Now all of a sudden I was looking at 62, 63 as an important overhead level. We've got up to 165 maybe, in a day and a half during the markets kind of being quasi shut in the US. What have I got to do with my position? So that's the importance of the timing of this. And I said a couple of days ago on the video, look for a big bar on the daily charts over this week or next week in order to get us through those highs, and this looks like it's happening at the moment. So this has all taken place today during the morning session basically of the European trading. We've got it up from 62 up to kind of mid 63s, and I'm just going to show you the tick bar charts to just show you how that kind of setup has happened. And I'm often asked, it's like the better indicators, do they work on Forex charts? Absolutely they work on Forex, but make sure you're looking at Forex contracts with volume. You need the volume data. You can't just be using the cash Forex contracts. I look at the CME Forex, the Globex Forex contracts, which have volume data. Now you will note that my data is delayed here, so there's a 10-minute delay on my data. I don't pay for real-time Forex data because I don't trade it, but the delayed data is, for me on a daily basis is interesting to look at. But this is intraday, so this is 10 minutes old, this data, and I've just put up the usual 500, 1500, 4500 tip bar chart. So the setup, just looking at the high time frame tip bar charts, we got 159. We started this advance kind of from here, blue professional down bar, spike down, and we start to take off to the upside. From here we've had a pullback to end of trend with a little bit of exhaustion buying up on a left shoulder, and we just settled into a congestion zone over the last week here between 161 and 162. Last couple of days we came back into support here, blue professional down bar gets broken, we trade up to the upside here. This is not over because we've not had an exhaustion signal on a left shoulder as we go on. So this was a flush reading kind of here, but we're back at these highs in terms of better momentum, and we've got all these blue professional bars buying through that resistance level there, and you can see them. I'm going to show you the lower time frame charts, just taking all the professional volume, taking us through that 60, 62, 62 and a half level up to 63s, and this is going to be a big reading. So let's go down to the 1500 tip bar chart, and there you can see the breakout here. So again, we tested down exhaustion selling with a Rambo pattern. Always say that's a little bit unstable. That's amateurs kind of going the wrong way, and all of them kind of going the wrong way. So we bounce off there, come back into that level at 62. Blue professional, 6150. Blue professional bars kind of step in again, and we break at this point here into an uptrend above 62. And blue professional bars, a little bit of gathering. That's a little bit above the resistance line, but they're just waiting and waiting. Interesting little kind of push down here during that trade, and then bang, there we go, blue professional bars taking us through the highs. Now we've got exhaustion selling on a left shoulder here, but this has got to make pullback to end of trend, and all of a sudden we're up at levels that we've not seen in a long time. So this is going to travel a bit, and let's just go down to the 500 tip bar chart, see what's happening there. Yeah. So here, pull back to dirty end of trend, or down here, blue professional bars, exhaustion, flush patterns, kind of holding it at this point, and then that was that little jerk down that we saw on the 1500 tip bar chart, getting rid of all the sellers. At that point we came all the way back up, bang, and we're through into another uptrend on the 500 tip bar chart, which is a very low time frame chart. I'm more concerned about these kind of daily and weekly charts here. And the reason why this is going to run is, I've been saying this, we're above resistance on 2 time frames, on the daily and the weekly time frame. This has got to run till we get pullback to end of trend and exhaustion patterns on a left shoulder. This exhaustion pattern was just short covering rally. It was just getting this thing going. We got to see something on a left shoulder. We've got to then put in our pullback to end of trend before this is all over. So this is going to be interesting. This move, wherever this takes us, is going to be very interesting. So on the flip side, the US dollar will be going down. The euro's rallying, I think, today. There's news out of Germany that Merkel's done a deal with the SPD, and they're instituting an €8 minimum wage in Germany, which is kind of extraordinary. We're in the middle of a recession in Europe, and they're adding rules onto the labour market when you're supposed to be deregulating the labour market. Just, politicians never fail to amaze. They're just, moronic. But anyway, this is the thing to watch today, and it's typical. A Thanksgiving weekend, very few people at their desks, the light liquidity, there's no one to fight this move on the upside, and this thing's going to tear away. And let's see where it goes next. Exhaustion buying and blue professional up bars is what to see before this thing's all over. So here we go.